Hey, what's up? So today I'm just gonna talk about ICC. I'm gonna break it down again, very simple. Because a lot of people are still kind of complicating the whole thing. And also, I'm going to break down a trade that I think is a very good trade. Is a potentially very good trade for the week that I'm looking at. Maybe it won't happen this week, maybe it next week, but potentially it's a good trade. So I'm going to be using US 30 for this. Um, what I want to explain to you guys is when trading ICC in general, you kind of have to have some patience. That's how you actually get a very good win rate with this system. You're not gonna catch trades every day. I highly recommend trading few pairs. One or two is okay, maybe three, but I highly recommend trading very few pairs. If you can do just one pair, that's even better. So, um, just cutting back down to the video, explain ICC in a way that it's kind of very simple. First of all, you need to understand that ICC is basically just indication, correction, and continuation. That's just what ICC is all about. It's all about price giving you an indication. I'm gonna draw that again. So it's just all about price giving you an indication, correction, and continuation. That's all ICC is about. So we have here uh, indication, correction, however low that wants to go, and then back above here is the continuation to target these highs. That's what ICC is about. And so when you trade in this kind of system, you understand that this is an uptrend. This opening right here is an uptrend, and if price breaks above this high, then that becomes a new indication, right? So if price breaks above this high, that becomes a new indication. And once you have a new indication, all you gonna wait for is that correction. Gonna wait for that correction to sell back down and then back above this level. You're doing the same thing that you've already done here. Back above this level, you're taking a buy to target these highs. This is basically what the system is all about. You don't want to complicate this thing. You don't want to make it any more difficult for yourself. Just do this simple thing. Now, using this simple thing I've explained here to look at what is happening currently on this particular pair. Um, I marked out this pair saying, hey, this pair is good. It's a very good trade. Potentially that can play out if we see price kind of correct down to the zone. So from what I've explained about ICC, which is indication, correction, and continuation, we understand that this right here, we understand that this move right here is the indication, right? So this move right here is the indication of price telling us that hey, above this level, I can go this high. That's what price is saying to us. Hey, above this level, I can go this high. This is the indication, right? Now this move coming down here is the correction because this is price after price gave us that indication telling us how high it can go. It started to correct itself, and we kind of expect the correction to correct itself all the way back down into the zone before maybe expect some range in here before we start pushing back up, right? So now, with that being said, we don't trade the indication, we don't trade the correction. That's for the basic ICC. You don't trade the indication, you don't trade the correction. What you trade is the continuation. But in this case, right, because I took a trade on this place yesterday, I will explain that one as well. But even if you happen to get into this trade on the indication, good. The correction, it still looks like a good play because it's kind of giving you lower lows and lower highs, lower lows and lower highs. Now, if you are just starting out trading, you don't want to trade the indication and the correction because you just starting out trading, you don't have enough experience to be able to make a more informed decision. So you want to like stick to basics and just kind of watch things play out to start to get more and more familiar with the whole move, right? But for me personally, sometimes I can trade the indication, sometimes I can trade the correction if it looks clean. So right now, what is happening is that I noticed that yesterday during trading, a lot of people were getting into buys around the zone. They were trying to buy around the zone, and if you look at what is going on right now, sorry, if you look at what is going on right now, you're gonna see that simply from ICC explanation, where it's all about like price giving you an indication. Um, hold on, let me. If you look at ICC, where it's price giving you an indication, right? Price range, and then gives you an indication. We need that correction back down into the zone for price to keep back above here. This is where we want to get into the market. In this case, price has not is not done with the correction. Yet there's sometimes where price don't correct all the way down here. But I'm making this video strictly for someone that's still learning to just wait for price to correct down here. That's the safest option. Now sometimes as well, the way you know if a correction is done or not is that just the same concept you apply in that indication, correction, and continuation, the same concept. You know that when price is trending upside, it's gonna be making higher highs and higher lows, and higher highs and higher lows, and higher highs and higher lows, right? If it's trending downside, you're gonna be making lower lows and lower highs and lower lows and lower highs and lower lows and lower highs and lower lows. So this is an uptrend because it's making higher highs and higher lows. This is a downtrend because it's making lower lows and lower highs. So with this um with this being said, and then you looking at what we have right now on US 30, what you're gonna notice is that if you go down, let me go down to a time frame where it's more clear. So I'm gonna go to the 50 minutes time frame. It's still basically the same thing. So I'm gonna go to the 50 minutes time frame. You notice price before price took off was making this a high, right? It gave you a new high. Now price needs to make a higher low, and right now it was making that higher low, and it was making the higher low with lower lows and lower highs. It's more like this is in the smaller time frame. This is making lower lows and lower highs, but on the bigger picture is just correcting to keep pushing up, right? So that is the reason why it's important for you to wait for the correction to be done, for you to get back in on the continuation. How do you know the correction is done? You're gonna expect a switch from price making these lower lows and lower highs to starting to make higher highs and higher lows. Now, if you look at this trade right now, because people were getting into buys here, I don't know why they were getting into buys, but if you look at this trade now, you're gonna know this is not like the clearest trade, but I still took it, right? So if you look at here, you're gonna see price made a lower high, lower low, price made another lower high here, made a lower low, and then price comes here and makes another lower high. Now if you look closely, you're gonna notice that this lower high right here made from price is not yet taken out. It hasn't been taken out, like, because for buyers, for you to confirm that buyers are starting to come into the market, you need price to take out a swing high level, which is a swing high level is a level that causes the break of a major level. So in this case, this was the last low, so this high caused the break of this low, so this becomes the swing high. In this time frame, this becomes the swing high. and this becomes a swing low. The lowest point it made becomes a swing low. Price corrects itself but never take out that high. Yeah, we got that this spike. I guess there was a lot of news going on around here this time, but it never broke above this zone, which still tells you that this high is still holding, and that for you to start looking for buys, you need price to start breaking above these highs for you to even have a chance, for your buys to have a chance to play out, right? So with that being said, um for this trade right here, currently, maybe unless we start to get maybe a push back above the zone, then I guess maybe you can say, okay, buyers can start to come in, right? But right now, as long as there's these levels are not taken out, sells are valid and sells can keep pushing price down into the zone. But a break above here would be like that indication, I would say. The break above here will be like that indication, and then all you're gonna wait for is that correction to then keep buying back up when it comes back above this level. That's like how I would approach this trade, and that's like me also explaining the concept of ICC, and like how you just have to keep trying to keep things as simple as possible, right? So for you to know that the correction is done, you need that uptrend structure start to come, and like I explained, uptrend is when price starts making higher lows and lower highs, and higher lows and higher highs, and higher lows and higher highs. That is when you'll get a confirmation that the buyers are starting to come in, right? You don't want to get scared of missing out on a trade. You don't want to get scared of missing out on the best entry, because, like I said, higher highs and higher lows, higher highs and higher lows. Even if you miss to get in here and price moves up and breaks a high, it's still gonna correct itself for you to get in. You just have to be patient about it, right? But what happens most times is that traders may come and maybe price made this low, started to make this high, and they missed out on getting into the buys here. And what happens is that maybe out of FOMO or something, they're gonna get in above here, and maybe they're gonna have their stop loss like somewhere around here, trying to catch that sniper entry. And what happens is market takes them out, and then after taking, I'm sorry about the crow if you can hear this on the background. It's early morning here. So after what happens is they get in here, have the stop loss here, price takes them out and keeps pushing. And this is just strictly FOMO. They are like scared to miss out on the move, and so they're trying to catch the move before it goes. And the market just fucks them up and all that. So that's why I say you need to like kind of be patient with it and just wait for that correction to happen for you for price to keep going. But before that, this is just the basic ICC indication, correction, and continuation. So for this US 30 trade, I would highly advise you just wait to see if price is gonna come back down here to give your trade the highest chance of actually playing out. Because under these levels is where you start to get confident and you just wait for price to accumulate. Then back above here is where you want to be in the trade and just buy until you get these highs. Um, in terms of I really trade BTC like that, but it's a good pair, I guess. Um, I also trade gold, and gold right now is looking good. In terms of that, for gold, we already have a new high on gold, and that's the same thing I'm saying. This new high is like our indication. Price has given us an indication of where it wants to go. So right now, all we literally just have to wait for is for price to correct itself. After the correction, then we can definitely get back on the trade on the continuation above these zones, because gold has shown us that it wants to go high, right? It has given us that indication. All you're gonna wait for right now is a correction, and then back above this level, you want to get to the trade targeting these highs. Now, in terms of risk management, managing risk, where do you put your stop loss and all that? I would say I like to put my stop loss under these levels. This is like, I guess you can put stop loss under these levels, but it's actually all depends on how the trade is looking. If you are trading in session or during when there's volume in the market, then taking your trade here, taking your trade here and putting your stop loss right under this level is valid. That's how it should be. Because once price starts breaking back above that zone, it has showed you that above that zone buyers have some control. Once price starts breaking above that zone again, or with volume, price is gonna push because it's at a level where there is no more sellers and there's all buyers. So it's gonna push to the next zone, right? That's how I say it. So under these levels is safe. But in some situations where maybe price, let's just say maybe price happen to correct itself all the way down here before starting to make that push back up, then seeing this case, you might just want to be a little bit more conservative, because you have to understand that this low is the low that made this push to this high. So as long as this low is still being respected, price the buyers can walk. So price can definitely come down, take out this low, come down a little bit more before going, right? So you can also use this low for your stop loss. But if it's too big, you can just use this one. But just have in mind that as long as this low right here, because this low right here is main thing, as long as this low is not taken out, buys is still in the market. So I'll explain it with a real chart. Here we got that push, right? So as long as this low make it, so as long as this low right here is still being respected, right? As long as this low level right here is still being respected, because these lows and maybe you can just also put this low into consideration. But these lows are the lows that caused a break of this high. So as long as these lows are still being respected, buys can walk. And that is why when you wait for that correction, you're looking to see that the correct price corrects itself but doesn't take out these lows and these lows. Because as long as these lows are valid, buyers can walk. And you're only looking for price to come back above a level where the buyers are in control. And from what we see here, back above here, price bought. Back above here again, price bought. Back above here again, price bought. So that tells you that above this zone, buyers are in control. Above this zone, buyers are in control, and they have the power to push price up, right? So, and that's all what it's all about. It's all about buyers trying to get into the market and push price to the next zone. So, and sellers trying to get into the market and push price to the next zone. So, it's always a battle between buyers and sellers, and your job as a trader is just to be on the right side of the battle, to be on the winning team, right? So, that's all I'm looking out for this week on trading. So gold, NAS, the NAS has been pushing. We expect some correction. If you can get that, then we can get a trade here. A gold, NAS, and then US 30 is the one that I like, but we still need price to kind of correct itself all the way back down here for us to start looking for a buy trade. But all in all, I hope I hope the video makes sense. I hope you guys understand what I'm saying, and I hope you guys take it easy trading. Have a good day.